Okay, so today we're going deep on smart investing in 2025.
All right, sounds good.
We've got some really interesting material to dig into,
Okay.
especially this piece called Risk versus Reward, Striking the Right Balance in Investing.
Yeah.
And lucky for us, we've got a real expert in finance here to help us make sense of it all.
Well, I don't know about all that, but I'm happy to share what I know.
So this piece was written by a guy named Ephraim Anugabi.
Okay.
And let me tell you, this guy's got some serious credentials.
Oh, yeah.
Over a decade as an audit senior manager.
Wow.
And get this, he's a published author with 15 books under his belt.
$15. That's impressive.
Yeah, so it's safe to say he knows a thing or two about risk and reward.
Definitely sounds like it.
So right off the bat, he jumps into this classic idea, the whole higher the risk, higher the reward thing.
The age-old adage.
Exactly.
Yeah.
But here's where it gets interesting. He warns us not to get carried away with unrealistic expectations.
Yeah, that's a good point. We see those get-rich-quick schemes all the time.
Oh, yeah, for sure.
Promising people they'll be millionaires overnight. But Ephraim, having worked in risk assessment for so long, knows how those stories usually end.
Right.
Discipline, patience, a solid strategy, that's the real key to success in investing.
Absolutely. And he actually lays out 3 strategies to help us strike that balance between risk and reward.
Okay, been listening.
The first one really jumped out at me. Beware of too good to be true opportunities.
Yeah, that's a big one.
He even uses this crazy example of turning like 100 pounds into 100,000 pounds overnight.
Yeah, right? Like it ever happens.
I know, right? It's like, come on, who are we kidding?
It's almost laughable, but you know what? Greed can be a powerful thing.
It's true.
It can make even the smartest people fall for these traps. Remember those stories about tulip mania back in the day?
Oh, yeah. Vaguely.
People lost fortunes chasing something that was clearly unsustainable.
It's crazy what people will believe sometimes.
I know. And that's where Ephraim's background in spotting financial red flags is so valuable.
Yeah, it really makes you think twice. Okay, so the second strategy is all about managing your expectations.
Okay, expectations management, important in all aspects of life, really.
Right. He says setbacks are bound to happen even when we have the best laid plans.
That's just part of the game. It's like running a marathon.
Okay.
You wouldn't expect to win without putting in the training and knowing there might be moments where you hit a wall.
Makes sense.
Investing is similar. It's a long game.
It's a marathon, not a sprint.
Exactly. And understanding that helps you ride out those inevitable market dips without making rash decisions.
So it's all about that long-term vision, huh?
Exactly.
I like that analogy. Okay, so the final strategy, this one's interesting. Hope for the best, but plan for realistic outcomes.
I like that.
He's really emphasizing calculated risks and due diligence.
Right. It's about being informed and prepared.
For someone like me who's just starting out, what does that even look like in practice?
Well, let's say you're thinking about investing in a new tech stock.
Okay.
Due diligence could mean going beyond the hype, looking into their financials, understanding their competition, and really assessing if the potential reward justifies the level of risk you're comfortable with.
So it's not just about avoiding those too good to be true deals.
Right.
It's also about making sure even the good deals are truly good.
Exactly. And that's where Ephraim's advice about seeking guidance from reputable professionals comes in.
Okay.
Sometimes having a financial advisor, someone who's been there and done that,
Yeah.
can help you navigate those complexities and make sure you're not missing anything important.
It's like having a guide in a new unfamiliar territory.
Precisely.
So it all boils down to this. It's not just about chasing the highest returns.
Yeah.
It's about making smart, calculated choices for long-term financial success.
Couldn't have said it better myself.
This has been really insightful. I appreciate you breaking all this down.
My pleasure.
Now that we've explored these strategies, I'd love to leave our listeners with a thought.
Okay, what's that?
What's one action you can take today to improve your own investment approach?
That's a good question.
Maybe it's doing some research on a potential investment,
Yeah.
or reviewing your current portfolio,
No.
or even scheduling a meeting with a financial advisor.
All great ideas.
Every step you take brings you closer to a more secure financial future.
Absolutely. So folks, take that first step today.
Thanks for tuning in to our deep dive on smart investing.
And remember, invest wisely.
We'll see you next time.
Take care.